Welcome to the Rudick Report. Today is Monday, May 15th, 2023. If you can, please support this channel by buying me a cup of coffee or by visiting my affiliate links. Your help is greatly appreciated and helps us to continue to provide content. As predicted in previous videos, the fear is being ratcheted up to stir the masses into a frenzy. Congress and the White House are attempting to establish an agreement to lift the federal debt ceiling, with only a few weeks before the Treasury Department may no longer be able to avoid a U.S. default. Economists and financial experts, of course, predict chaos, but we all know why. It's because these stock market junkies need their fix from the federal wallet, and that's exactly what they will get. But before they raise that ceiling, they will ramp up the fear and tell everyone they will lose their jobs, there will be no Social Security, interest rates will skyrocket, and of course, let's not forget the collapse of the entire stock market. The good cop, bad cop scenario will play out until they announce their 11th hour bipartisan agreement to save our country. It's all a joke, and the joke is on you and the rest of the American people. In the meantime, though, the fear will be pushed up to extreme levels. According to Mark Zandi, chief economist at Moody's, it will be a lethal combination, and you can see how this thing could really escalate and take down the entire financial system, which would ultimately take out our economy. Treasury Secretary Janet Yellen has said the government may be able to sustain operations until June 1st before running out of money if the government cannot borrow more. So if you enjoy the fear, here is what the talking heads are predicting. First and foremost is a stock market crash. The shock of a missed payment would ripple across the financial system with stocks, bonds, mutual funds, and derivatives before spilling out into the broader economy, experts say. Stocks would likely plummet on the expectation of a wider economic downturn as interest rates rise, as investors pull funds out of the market to preserve their access to short-term cash, and a banking sector already wary of making new loans could tighten up even further. Moody's Analytics has estimated that stock prices could fall by roughly 1/5, while the White House has estimated that the decline could be closer to 45%, wiping out people's 401ks, retirements, and investments. Also, the value of existing Treasury bonds would collapse, and businesses would likely have to halt expansion, driving stocks down even further. Moody's Analytics has estimated that stock prices could fall by roughly 1/5, while the White House has estimated that the decline could be closer to 45%, wiping out people's 401k retirement investments. Also, the value of existing Treasury bonds would collapse, and businesses would likely halt expansion, driving stocks down even further. There is also a prediction for a sudden recession, as if we're not already in one. The impact of not raising the debt ceiling would quickly spread from financial markets to the broader economy. A drop in household wealth across the country would reduce consumer spending, which would hurt business. Because interest rates would be rising, it would be very difficult to get a loan. This, of course, would cause a severe downturn in the housing market. Of course, central banks continue to inflate, but they could reduce inflation almost overnight if they increased capital reserves for institutions above zero. But they would never do that, and certainly they would never let you know. The most dramatic impact might be a pause in regular federal payments to tens of millions of American families, including seniors on Medicare and Social Security and people relying on food stamps. The federal government is projected to spend roughly $6 trillion this year, which translates roughly into $16 billion per day. But don't worry, they will keep sending money to Ukraine to fight the proxy war with Russia, but you? Who cares? You're only a citizen of the United States. They would rather support foreign wars than support their own people. Federal workers could be put on furlough, where only essential workers continue to do their jobs. Of course, they will all get paid at some point when the shell game is over. But let's be honest, the government needs to tighten its belt and get rid of useless social programs. Then there are roughly 60 million people who receive monthly Social Security and Medicare payments. And while they will try to scare everyone saying these payments won't be made, the fact is they will be, as there is a provision that has tax revenue redirected to make these payments. So don't lose any sleep over it. Then we have the issue of U.S. borrowing costs soaring. The federal government can borrow money quite cheaply because it's seen as a very safe credit risk. The safety of U.S. government bonds has made them an essential building block in the world financial system. Serving as reserves for everything from foreign nation central banks to money market funds, U.S. Treasuries are widely recognized as one of the most secure and liquid investments available. backed by the full faith and credit of the United States government. But a failure to raise the debt ceiling could throw everything into a spiral, leading to uncertainty, which may cause the borrowing discount to erode and could cause borrowing costs to rise by $750 billion over the next decade. Of course, this would cause economic problems worldwide. Many nations protect their finances by buying large amounts of U.S. government debt, which are regarded as one of the safest assets in the world. But not raising the debt could drive the value of those bonds down, hurting many nations. A default could hurt the reputation of the United States on the world stage by revealing the depth of the country's internal political dysfunction. Roughly 60% of foreign currency exchanges still happen in dollars, but a default on U.S. debt, which could send the value of the dollar down even further. But even with all this happening, it's not time to panic like the masses. It's time to quickly prepare and get yourself and your family and friends up to speed to what is happening and prepare accordingly as best as you can. Don't put your head in the sand and hope for the best. Take some action. As with all my messages, this is not financial advice, but it may make sense to get extra food, extra water, get cash for emergencies in case there are runs, and if possible, get out of debt and move some money into precious metals. There are many reputable companies to buy from. Some include JM Bullion, SD Bullion, and Money Metals. But you can use whoever you think is best. But just take some action, as small as they may be, before you can't. Until next time, this is the Rudick Report.